We have Chad from BDO on the podcast. Welcome to the
Chad,
pod.
what's up, buddy?
Nice to be here.
Yeah, man. Dude, I was chatting with this guy earlier. He's got a lot of info. I could have used his services a couple years ago.
There you go. Well, you mean, too bad we had not met at that time.
Yeah,
so.
man. Do you even work in Alberta?
I used to have one client in Alberta, and then they moved. Now they're in Ontario.
Okay, because you mainly work in Ontario, yeah?
Yeah, most of the time, but it all depends on, like, you might have a relationship with the client, and then they move out there, but they're going to still keep working with us. And some of our clients are big enough. Like, I have a big client who has a permanent establishment out in Alberta.
Yeah.
But their headquarters is outside of Guelph.
Oh, okay.
So then, you got to file the Alberta tax return and deal with that.
So tell me, what do you do? What's your job?
Yeah, so basically I help from, so I'm in the accounting and assurance group. So I'll help clients, like if they need compilation financial statements for the bank, like we'll prepare those financial statements for them, like walk them through like what it actually means. Like, I mean, what are the numbers? How do they sort of like, you mean you made this much in revenue, this much in expenses? What are things that you can actually expense within your corporation?
What can you expense?
The definition that I use is any expense that you wouldn't have otherwise incurred if you weren't operating the business is the best way I try to describe it to clients. So they're like, I mean, can I expense this? It's like, well, would you have bought that suit if you didn't have a dental practice? I mean, clothing's probably a bad example because I always tell people, like, don't expense it.
You can't
Everyone's got to buy clothes. You got to have something. But it's like, I mean, if you're having to travel all around to, meet with your accountant or meet with your lawyer or whatever, like, expense the mileage. Like, that's an expense that you wouldn't have incurred. You wouldn't have had to come to my office to talk to me if you didn't have a business and a professional corporation.
Really?
Things like...
Can you put your car in your prof corp?
You can.
I've heard so many sketchy things about this.
Yeah, it just creates some complicated, because then you gotta separate out the personal benefit you would get from the car. Yeah. So depending on like how much the car costs and things like that, and there's certain limitations on how much you can deduct. So say you buy a car and it's worth $50,000 in your corporation, the limit of the actual like tax cost you can claim on it is 30. So you're losing out on the 20, and then every year you got to calculate, okay, how much did I use that car for personal purposes, and then add that to your T4 statement saying, okay, this is my personal benefit from using a company vehicle.
But like one step back.
Yeah.
What is incorporating, and why should someone do it?
Yeah. So it gets more complicated with professionals, but like if you're just operating the actual business and you're making a decent amount of money, the two biggest things for incorporation is you pay a much lower tax rate at the corporate level. So if you operate like a business in Canada, it's a small business and it's owned by a Canadian resident, you only pay about a little less than 12.5% of the profit that you earn. Whereas if you
that's only federally though, right?
No, that's federal and provincial.
12%.
It's super low for the first $500,000 that you make. So
because then you lose that small business exemption, right?
Yeah.
And then what is after that? Like
as
26?
You get bigger, it goes up to 26, but it's only on 26 for the income you earn above the 500. So as you get bigger, you lose as much of the benefit. But let's say you're starting your own practice and it makes sense to incorporate if you're going to make a lot of money. The other big thing is from a legal perspective, like obviously incorporation will help to protect your personal assets.
Expand on that.
So if let's say you're operating a dental practice and you're not incorporated and something happens and a client goes to sue you, well, now all your assets, your house, your RSPs, all your financial savings, they can technically go after those assets. Whereas if you have an incorporation, the business runs as an incorporation, they're dealing with that corporation, they can only go after the assets of the business. So they could take, they could potentially, if you were negligent and you're at fault, they could take all your equipment and make you sell the business and you'd lose all that, but you'd still have a house and you still have your savings and you could start over again.
But every dentist keeps as much as they can in their prof corp.
That's essentially what you generally do. You try to defer. It allows you to defer the tax because the way it works is you pay that 12.5% on the first 500 and even the 26%. But like especially if you're a successful dentist, like you could be making hundreds of thousands of dollars a year and paying in the higher marginal rates 53 cents on the dollar.
But I think Necky's point was,
okay,
if you are trying to protect yourself, if everything's in the corporation anyways, then like they're kind of seizing the corporation. So it's
so the two ways to do it then is you want to leave the money in a corporation, but you set up a professional corporation or a holding corporation to hold your shares in the business. So as you earn additional money, you pay dividends up to your holding corporation, your PC, and then it protects the assets because they're not in the business, but you still don't have to pay the tax until you pay it out from the professional corporation to yourself as an individual.
When is the right time to incorporate?
Generally, we tell, like, if a client is just starting like a normal business, you'd say, okay, wait till you're actually going to be successful. Like, I mean, after a couple of years, and you're like, okay, it's a viable business, then you set up the incorporation. Generally, like, if you're operating like a dental practice and you're having to acquire a bunch of like equipment and you're going to have a lot of liability and you're likely going to, I mean, generally this is like a much less risky than someone starting like a landscaping company or whatnot.
Yeah.
I mean, they're probably going to be a viable business. So then we would recommend like incorporating basically right away.
Yeah. Hey, I got a question. I've always wondered this, and let's just be real here.
Yeah.
So when you pay an accountant to file your personal taxes, it costs a couple $100. When you pay an accountant to do your corporate taxes, it's several thousand. Why? Why is the difference? And why should dentists be concerned about that?
Yeah, so the biggest difference would be the complicated nature of it. So they actually do, as much as personal taxes might seem more complicated to, like, you mean an individual who has no experience there, they're pretty easy to do as a professional. Like, you need to do your personal tax return. We can download a lot of the information from the CRA website because all your T4s and other T-slips are already filed there. We'll check. There might be some tax planning and whatnot. But to do like a corporate tax return, like, you have to create a set of financial statements to send to the CRA. So you got to reconcile your bank account. You got to do all this. There's a lot more schedules involved.
I didn't realize that.
Paying dividends. It gets more complicated, and there's a lot more rules, and it gets a lot easier to mess up a corporate tax filing than it is a personal tax filing.
Yeah. Akil, you know, I know you're a dental student, and when I was a dental student, I didn't understand any of this. But I know you have a financial background, so you do. But assuming you didn't, okay, I found when I was a new grad, I was looking for a quarterback.
Okay.
I was looking for a quarterback to tell me when to incorporate, a quarterback to tell me when to invest, when to make a holding company, when to do any of this. Who the hell is that person? Because I've yet to find them.
Yeah, so like we generally like to take on that role with our clients. So like we'll try to connect with a lot of students like as they're coming out, give them like, I mean, hey, here's some, here's some things that you need to consider when doing it. But yeah, if you come in and you work with us, that's sort of the role we try to take on. Like another good example would be like a lawyer generally has like some of that information too. And we usually work closely with them, especially if you're incorporating and updating the corporate minutes or having anytime we have to do any tax planning, generally we have to get lawyers involved. So they can be very helpful too. But yeah, like that's essentially our role when we bring in new clients is we try to take on that quarterback role, just so we can, help you navigate through it, tell you when to incorporate, tell you when to set up a holding corporation, tell you when to maybe some tax planning things that you can do. Setting up family trusts is another one ahead of a sale, so you can multiply your capital gains exemption, things like that.
What?
So,
really?
Yeah, so the way, and I guess this is probably something, it seems like everybody would know it because like everyone that I work with would know about it, but every individual has a lifetime capital gains exemption of about $950,000.
Yeah.
So if you start a small business and you sell a small business, you don't have to pay tax on the capital gain like up to $950,000.
Right.
But every person has it. So if you have a family of 4 people, all of your family also has $950,000. So in advance of a transaction, generally we would set up a family trust to multiply your capital gains exemption. So if you're going to sell your business for $3,000 or $3 million, sorry.
Yeah. Oh shit.
$3,000 is a good practice.
Yeah.
But yeah, so in a basic example, you're going to sell your practice for $3 million, probably a pretty small practice, but you could multiply the capital gains exemption between your 2 kids, your wife, and yourself, and not pay any in tax.
Really?
Yeah. So you could take that whole $3 million and put it in your pocket.
But I have a question. Why would someone,
After accounting fees, of course.
Yeah. Now we're talking.
So like, if you separate, sort of the buying and selling aspect, like an ongoing, dentist needs.
Yeah.
It's so often that I see dentists that we have as clients.
Yeah.
Oh, like my, brother-in-law's my accountant, or my high school roommate's my accountant.
Yeah.
Why is that potentially dangerous, and why does BDO address that problem, or how does BDO address that problem?
Yeah, so I think the biggest thing, and like we specifically specialize in like the healthcare field, specifically dentists. Like, I mean, we'll do other ones like other
I love
doctors,
when you guys call it healthcare when it's like 90% dentists. Yeah. It's like, no,
well, they're the most successful ones.
But it's funny, just call it dental and then have like a little wing doctors or like optometrists.
Yeah, I have a few veterinary clients who maybe would take issue.
And veterinary.
But yeah, and it's a lot of the same type of things. So you can like that. Those are the individuals that can set up professional corporations.
Yeah.
But I think the biggest key around it is there is so many potential dangers that you could get into with a professional corporation. How to set it up appropriately, making sure you're following those rules, and then just the knowledge of like the industry knowledge. Like, I mean, if we are doing dentists all the time, we know some of the other challenges that some of your competitors might be having. Obviously, we're not going to share confidential information about it, but we can help you and say like, okay, here's what we're seeing in the market. Here's what we're seeing. If let's say you're going to sell, I mean, and we're helping like quarterback that deal, we can be like, yeah, this isn't a reasonable price. Like, you mean, we've had other people sell and they're getting way more than this. This person's trying to lowball you. So we have that experience from working with other people, like other companies in the market, and then have that industry expertise when you're setting up a professional corporation, the loopholes
so
that you can get into.
What are some of those horror stories that you've seen of, a dentist hiring their like brother-in-law? Like, what are the really risks?
That can be so dirty, right?
But it seems like
happens.
Benign, right?
Totally,
and it's like you don't hear about the horror stories. Yeah.
Honestly, like, I don't really see them because, like, most of the time, like,
you see your clients.
Dentists are like, they're very loyal. So like if they get an accountant and they work with that accountant, they're not going to leave that accountant. So like generally we're not getting dentists that come to us after they've been practicing for 15 years and they've been using their brother-in-law. They just stick using their brother-in-law. So honestly, I've never really heard the horror stories because we try to keep the clients that come to us, we keep them out of that situation. So yeah. So I've seen like the more complicated thing is usually the bad situations that our clients sometimes get into are more they get into a partnership with another dentist and then from like the practice management they disagree and then we have to sort of try to figure out okay what's the best way we can help them maybe split it. So like there was one situation where they had two offices and two partners working together. We basically had to split it and be like, okay, you take this office, you take this office. And had to work and try to like basically separate out like, okay, we'll represent, because we used to represent both of them and now it's like, okay, we'll represent one of the individuals. Someone else has to represent the other one to try to mediate. So that's usually what you'd see. But yeah, like I don't have any horror stories. I just know that we do it right. So.
Yeah. Chad, I'm going to ask you a question. I'm going to put you on the spot.
Yeah.
I find dentists every year are a little bit more skeptical of everything we do, even just of this podcast. They're like, what are you trying to sell? And I'm like, dude, we're not selling anything, man. I'm just trying to get to know you. Like, why can't we just get to know you?
Yeah.
As a business person in dentistry, you can't tell me you don't feel that. Okay? How do you build trust with clients?
I think the biggest thing is
that's a great question.
Yeah, is just consistently showing up. You know what I mean? Like they want to know. Like when we were trying to go out there and like meet clients, it's like, okay, we were there on like we go to the dental schools and we're on campus and we give them. Here's some free advice and you can meet us. But we generally won't, and we don't like to get into those situations too with new clients where. After you meet us once, you sign the engagement letter, and then we go from there. Like, we'll meet with you like a few times. We'll let you. Feel free to grill us. Feel free to ask all those questions. Make sure we know what we're talking about, and build that trust over time. And then the other big part is like word of mouth. So like we actively work to service our dental clients really, really well, so that they'll tell. The other dentists that they work with. That someone else vouching for you and being like, okay, this guy knows what he's talking about. This guy will give you good client service. He won't mess everything up. He'll keep things well. So that's the biggest thing for sure.
One of the other things that I found was transparency.
Yeah.
And I started when I was a younger dentist. I didn't, and I kind of wish I did.
Yeah.
And now I always ask, how much is this service going to cost me?
Yeah.
Yeah. I think being transparent on fees is so important because. And for dentists listening, going by the cheapest fee is often the worst choice.
Yeah.
Going by the most expensive fee doesn't mean it's the best choice.
Yeah.
Do you know what I mean? So how, as an accountant, how are you transparent on your fees?
Yeah, so generally the way we do it is every single year we'll have you sign a new engagement letter or a summary of services letter. So basically it's like, okay, here's what we're going to do, and here's what it's going to cost.
And here's what you get with it,
and,
right?
And here's, like, so we're going to do your financial statements, we're going to do your corporate tax return, we're going to do maybe your T5 slip for paying out dividends, and here's what each of those items is going to cost. And we'll send it to you. You sign on. We're both agreeing to it ahead of time. So then before we even start the work, it's like, okay, you know how much it's going to be. And like the same way, like, I mean, when I go into my dentist, they're telling me, okay, this is how much it's going to be for your annual appointment ahead of me, like, actually doing it too. So like that's a big thing. But there is times when, like, let's say we're doing the corporate tax return and things maybe are a mess. I mean, the bank doesn't reconcile, their opening retained earnings isn't there. There's some new complicated thing that happened or whatever. And any time that we're going to have to, like, do, before we go and do a bunch of extra work and then charge you our hourly rate for it, we'll reach out to you, be like, hey, there's some things, like, does your bookkeeper, are they able to, do they want to figure this out, or do you want to engage us to do it? And then we try to give you an estimate, okay, this is what it would cost us to try to clean these things up.
Because the worst thing you can get is random bills in the mail.
Yeah.
And I found that with a previous accountant I worked with, and I was like, why am I getting a $6,000 bill? I already paid this, you know what I mean? And then that's when I think transparency is lost.
Yeah.
And that's when trust is lost. So I always find, like, my recommendation for dentists out there is exactly what you're doing. Work with a group practice accountants with that have everything set up. Work with a quarterback. You're going to pay for it, but it will save you hundreds of thousands of dollars over your career.
What would your fees be compared to, like, a mom and pop accounting shop?
Like, so, like, we're going to be more expensive.
Yeah, you're not going to be cheap.
Yeah, like, so, and we're professionals, just like dentists are, like, are professionals too.
You pay what you get for it, man.
Yeah. So, but like I said, we'll be upfront. This is what it's going to cost, but you're going to get a level of service, like, with us. You're going to get a level of expertise. We're going to, again, find things that maybe somebody wouldn't, keep you out of trouble, and provide that support with you there. And, like, we have, like, a team of people. So let's say you're working with, I know you guys had Christine on the podcast the other day. Let's say you're working with her, and something were to happen, like, she's off, or she, was sick or something like that, she wasn't available. You got a team of people. Like, I'm there working with her constantly on the file. I'm familiar with it. I can step in at any time. Whereas maybe with a smaller shop, you're working with one person who knows everything about you, but it's a one-person team. So if something were to happen to them, then you're kind of SOL too. So we have, like, a large team there. We have, like, we provide very good service for our clients, and we're very knowledgeable with, like, years of experience doing it. So.
To Necky's comment about the quarterback, though, what I think is, and I was talking to Christine about this yesterday, what I think is really important what you guys do is provide benchmarks. Okay, this is what an average dentist is spending on salary. This is what they're spending on, X. This is what they're, like, you have the data because you look after how many dentists?
I honestly don't
probably
even know.
thousands of dentists, and you have that data, so you can actually, you can play that role of being that advisor, because dentistry is lonely, right?
Yeah. Oh, God.
We don't know what we're doing.
Everyone's too scared to talk about money. I'm more than happy to talk about money because I've made all the mistakes. You know what I mean? But, like, you're totally, I love that. I didn't know that was even a thing.
That's what
man, hook me up with these numbers, man.
I heard this, and I was like, that is your key differentiator.
Yeah.
Because we don't know what the person down the street is doing.
Yeah.
We have no idea.
Yeah, and you're not attaching names. You're just attaching the average, right?
And generally it's, like, averages too. Like, so we'll do it with, like, all of our clients too, in whatever industry they work in. Like, we'll get an industry report. To give you another, like, a good example too, it's like, hey, there's a golf course, and, like, here's their revenue breakdown by membership fees, green fees, food and beverage, and then here's what the industry average is. So it's like, where do you compare to that? And we can, do it, like, generally with some of our clients too, we can do, like, a presentation, be like, okay, here's your business, and then here's the industry averages, and here's how you kind of stock up. And we're actually moving forward into that. Like, we're migrating to, we have, like, a personalized audit software, but we're moving all of our clients into it, which will allow us to data mine that and give even more accurate benchmarks of that. So that you'd have the data not only of, okay, here's what I'm seeing with my practice of clients, maybe in the Guelph area. Here's like in Canada what we're seeing as far as like national averages or like regional averages and things like that.
Damn, I'd pay a lot of money for that. I'm not gonna lie.
So the ODA puts out.
Sounds like I already got you as a client.
Yeah,
Alberta.
I think ODA puts out benchmarks, but I think you guys actually use, like, I think ODAs is like survey data, and you guys use real data.
Oh, yeah. I don't think survey data is accurate.
No, because everyone's gonna be like, you know.
Well, and it would only be based on the people who actually answered the survey.
That's right, which is a limited amount of numbers.
How many times have you, when someone asks you self-report, said something that, you know, is worse than the truth? Or even the truth? You're always like, it's like, you know, I'm fine.
They're trying to make themselves either look better than they are.
Cool.
Sure.
Thanks, man. Thanks for coming on the podcast.
Yeah, you can't end it now. I love this guy. He's my new accountant.
Yeah, thanks for coming on the podcast.
No, I already, we signed we're already signed up. It's time to get out ahead while you're ahead.
I got too much shit under my hood. So no, that's wicked, dude. Chad, thanks so much for coming on, buddy.
Thanks for having me, guys. It was really nice.
Yeah, look forward to talking to you.
Yeah,
absolutely.
Welcome to the Hi, I'm Neki. Is that a sweater?
Yeah, dude, it's the Hi, I'm Doctor sweater. Oh, dude, I see you got yours on too. Looking sharp, bro.
Dude, where'd you get yours from?
It was super easy, man. I just went on to our website, www.hiimdoctor.com. That's HIIMDR.com.
We have a website. We must be raking in cash from selling these sweaters.
Dude, we are killing it. I mean, if that includes losing money on every single sweater that we make, I think we're doing really well.
Yeah, Neki and I are donating all proceeds, which is $0, to charity because we are losing money.
I wonder if the charity will pay us. I think we got something here, man. Let's keep on losing money on every sweater.
Alrighty, guys, go check us out. hiimdoctor.com.
We'll see ya.